So if last year you made 100,000 and the year before that you made 50,000, well, we're going to average both that out. 100,000 plus 50,000 divided by 2, that's going to be your income, right? So we get an average from them too. Now, in that right there could be 75,000, right? So if we use a 1-year tax return, we're just going to use your 100,000 that you made previously. Loans with Q Mortgage, episode 5. What programs are available for self-employed? So when it comes to a W-2 and a self-employed program, there is some differences. You're able to get the same programs, right? So I want to make that clear. There's the same, basically, you can still get FHA, you can still get conventional, you can still get those similar programs. The only difference is the documentation is obviously going to be very different, right? So what's going to be needed is your taxes. That's if you want to go with that route, which is going with FHA or conventional or VA or some of your traditional programs. They will require normally 2 years tax returns. That's what's going to be needed. And there's certain ways we calculate it, but it's basically after deductions, right? So it's not, oh, I reported 100,000, that's my income. No, it's after deductions. Now there is, if you go with the right tax person, and we have someone that we can recommend that know how to do it, there's certain write-offs that count as credit, like depreciation. So there's certain different write-offs that will calculate as a write-off to the IRS, but then for mortgage, we count it back as income. So very important. So 2-year taxes is what's going to be needed. Now there is programs like a conventional 1-year taxes that we only use 1-year tax returns, most recent, which is powerful because if you get 2 years, we use the most 2 recent taxes, right? And we get an average of it. So if last year you made 100,000 and the year before that you made 50,000, well, we're going to average both that out. 100,000 plus 50,000 divided by 2, that's going to be your income, right? So we get an average from them too. Now, in that right there could be 75,000, right? So if we use a 1-year tax return, we're just going to use your 100,000 that you made previously, which is powerful, game changer. So there's a 1-year tax return program. We're really good at it. Let us connect you with our tax guy. And then as well, there's also profit and loss only programs. So all we're going to require is a profit and loss statement from your CPA accountant, and whatever the profit and loss statement states, that's the income you use. Now with these type of programs, there is higher rates, higher down payment, but that is a great option, profit and loss. As well, there's bank statement only programs, which can be powerful because you might not report everything you made, so we go based on whatever your bank statements show. There's a lot of calculations but that's a bank statement only program. We also have a 1099 only program that we use your 1099 income. So those are the other alternative programs for self-employed. So you have a lot of options. Reach out to us. Let us go over your situation, and we'll let you know exactly what program is best for you.